Hey guys, it's a market update. A complete and total disaster this week is turning into. Look at this. This weekly candlestick, 17% to the downside since the all-time high a couple of weeks ago. We're looking at almost a 30% drawdown now. So it's getting into one of the bigger drawdowns, and candlesticks like this don't usually just reverse, right? The market has capitulated. All support levels have gone. The euphoria over Trump and the SBR, all of that's over. That's going to take a long time through Congress. It's going to get diluted, and things that are just not the way that people thought when the election was won. Everyone thought, wow, it's going to be instant and everything. We're all capitulating out right now. I still think we're in a bull market for sure, and I'll tell you why in this video. There's a lot going on though, and it's very complex, and so that's why the market is taking a breather, and leverage is coming out of the system. You can tell that. Look at the daily chart here. The RSI is massively oversold. Now, I still think we're in a bull market, and I'll explain that in a second, but when the RSI is oversold, you either believe or you don't. Non-believers are getting out now, and they're capitulating because you either buy here and you believe or you don't. Now, I do. I believe in Bitcoin. I believe it's still in a bull market, and I'll show you why in this video. But if you trade and you don't have a Bybit account yet, $30,000 deposit bonus in the description. If you can't trade on Bybit, trade on Bybit's DEX, which is Apex. Again, same deposit bonus and a 10% fee discount. Just trade from your wallet. Links below for all of the details. The big problem we have in markets right now is that the fiscal situation in the States is changing. Now, under Biden, it was just unlimited spending, and that's a stimulus to markets. All prices go up, stock market all-time high, great news, but that's changing, and we get the hangover now, which is the Trump admin seems to be actually wanting to bring down the fiscal side and balance the budget. Now, that sounds great, and it is, but in the meantime, what that creates is a massive drag on GDP, on inflation, and it creates higher unemployment. They're literally cutting the government, which is 25% of GDP. That is a Keynesian recession. High unemployment, low GDP, low inflation. And that means asset prices are going to crash if they let this happen again and again. This means absolutely sums it up. Recession, targeted reduction in the 10-year yield. They want to get the 10-year yield down. That means that inflation expectations and GDP growth and stimulus have to get cut out. That's also called a recession. And this is what the market is now fearful of, and everything is, pricing this in, especially in crypto. We got very, very high expectations and everything, and now reality is hitting, and people are getting, basically stopped out on leverage and capitulating, and we have to come down to a different level for BTC. And the market, it's not going to like higher unemployment, low GDP, and low inflation, right? Where does that stimulus come from? If the government is 25% of GDP and it's going to cut itself genuinely, and it's actually going to do that, where is the stimulus from? Now, there are many things that can happen. Investment, right? Investment from private businesses, credit creation, deregulation, tax cuts, all that's great. It takes long periods of time through Congress to actually go through. In the meantime, the market panics, which can happen very quickly, and it always happens like this. The market panics, it prices this stuff in, and then it actually comes out in the wash that they do things and they spending bills and everything, but it takes time, and the market always crashes and forces the hand of either the central bank or the government to actually step in. But we're going to have to go through that first, and this is what the market is trying to price in. We're at $80,000 Bitcoin. It's actually insane, but this is just what we have to go through, right? It's not just stepping up at 10 basis points a day to the upside. This is what we have to go through in a volatile market. It's clear as day what the goal is. The process is going to be very, very messy, right? You're removing the thing that kept us growing the last few years. 25% of GDP is a government. They want to cut themselves. They genuinely want to cut themselves, cut spending, and unemployment is going to rise, and that is leading to knock-on effects, potential recession or recession fears, and that's what the market's going to price in. If Doge actually cuts this, you can see 100 billion a year, 200 billion, 600 billion a year. If they actually get this, this is the effect. This is great data. GDP will come down. When you cut 25% of GDP as a government, when you start cutting that, that will cut GDP and inflation. And so that's a recession. That is a recession if you get these coming down, right? Negative GDP. So these are the scenarios here. Unemployment will spike. Inflation will come down. Fed funds rate will obviously have to come down as well. But how this all actually comes out in the wash is very uncertain, right? It's not going to happen as in a perfect scenario where you get some cuts from the government, but then on the other side you get this perfect amount of reinvestment from private businesses. It's going to be messy, and you're going to get volatility. Now you have to believe, right? You have to believe what you're in. I believe what I'm in. I believe that we are in a bull market, and I believe that right now, if this is happening and people now have recession fears and GDP coming down and inflation coming down, the bond market is totally mispriced. The Fed at 4%, totally mispriced. That has to come down by half if we're going to get much, much lower GDP and inflation. So that's the flip side and the positive side of things, right? Is that, look, let's price this in now. We always price it in quickly for Bitcoin and crypto, super volatile, super quick, right? That's just how it works here. But if we are getting these drags, then the flip side of that is that the macro has to change a lot as well, which obviously can potentially bail us out a little bit. But we're going to get this crash whether we like it or not, because we reprice first and then ask questions later, and everything coming out of the wash, that's going to take a long time. But if macro does come down, that's pretty supportive for the rest of the bull market. I don't think that we're even maturing in this bull market yet. All of the data suggests we're actually kind of midway, and the next phase could be the macro phase, which typically is actually pretty good for risk assets. So yeah, I believe that. And obviously, 80,000, like it looks like a capitulation, but 80,000 Bitcoin, in the big scheme of things, we're doing okay at 80,000 Bitcoin. Inflation, officially, the PCE rate, which is what the Fed focuses on in the States, is still too high. And so if this comes lower, this actually gives the Fed cover to be more dovish. Maybe the dollar can come down a little bit, and that gives other central banks cover to actually stimulate as well. That would be great, but we have to go through the weakness first. You have to get that weakness so that rates can actually come down. And they're still way too high. So we're in that point now where you're seeing the economic data slow a little bit, but rates are still too high. That's not good, right? So either rates have to come down or the data gets a bit better. Rates are going to come down as we see this weakness, but it's starting to come out in the data. Very, very slow, very small, I know, but obviously people read into these trends. So government employees, unemployment insurance claims, you can see that here. This is a year over year, where you can see definitely ticking up. 25% of GDP is the government, remember, and they're cutting themselves. You can see initial claims by geography in DC, so it's definitely starting to take an effect. Initial claims, look, maybe moving up. It's not enough data here, right? But we need inflation to come down, and that means GDP comes down as well. And they want to stimulate through tax cuts and everything else. That's going to take time through Congress. And so we are in a air pocket between all of that. Economic surprises index, this is showing a weakening economy essentially. And then the GMI financial conditions index, this is from Julian Bittel. Look, we might go through some more pain before a bounce right here. So just to keep that in mind. However, look at this, very, very, very oversold. The oversold periods in previous history, so this is the bear market here. As we've been climbing out, we've had these oversold areas. We're oversold again. And so, yeah, if you invest in crypto, Bitcoin, you have to be buying during these periods. The best days for Bitcoin are where the price comes down the lowest, so you can dollar cost average into it. Because we're not here, some taking profits, I know, but this is still a young asset. Most of us are still fairly young, right? We're looking forward 10, 15, 20 years time. So this is the volatility that creates that extra return over the S&P. If you want to go in the S&P, and that's fine. You're not going to get big drawdowns, but you're not going to get the returns as well. So this is why we're here, right? This is why we're here, to have confidence and to believe during periods like this. River released a great Bitcoin report this week. I'll try and link it below because there's a lot of good fundamental data in here. This is Bitcoin down here, just above my head. It says the supply growth each year is about 85 basis points. That's going to come down to 0 over time. Gold is around 2-3%. US dollar average annual is around 7%. The volatile thing is not Bitcoin. Bitcoin's literally just the same thing every single day. It's a fixed supply of coins. That's it. The volatile thing is the fiat currency and the debt. And that's what creates volatility and uncertainty. It's debt, isn't it? It's being able to take debt out. It's the price of assets because we have a currency that we have to use through legal tender rules, and that is drawn down and it's supplied in. That's the volatile thing. Our life, the way we behave, FOMO, fear, FUD, what's going on right now, dollars being created, dollars being taken away, that's the volatile thing. But we know over the long term, they must be created because the debt-based system requires it. Average annual supply growth rate is 7% versus Bitcoin now at 85 basis points going down to 0. M2 money supply growth rate, it's actually not that large right here. So we have been pumped up actually. So if you think about it, most Bitcoin bull markets are macro-led. So you can see here M2 or money supply growth, here money supply growth. We've had a really good bull market on not much M2 growth. And that means the bull market has gone so far essentially on ETFs and the Trump win. That was basically it. ETFs and Trump win pumped us up very, very high without them M2 growth. So will M2 grow? Will we get the recession first, or we get a drawdown first? We get inflation expectations coming down first, then around the world they can actually go through the next range of stimulus. That would suggest that we have another leg in this bull market. That's what I think will happen. It's going to be super messy, but that is my base case, and that's why I'm still in. You can see here as well, strategy going absolutely insane buying Bitcoin. That's it, isn't it? So the rises this bull market, ETFs, strategy coming in, Trump winning, everyone gets excited, but the reality is the macro, we just had an air pocket, got a bit high, air pocket came in with the macro, draws us down a bit. But I think that once we get some weaker data, and I hope that comes because we need it, then the macro can sort itself out. Interest rates can come down, the Fed can get more dovish, the dollar can weaken, other central banks can ease, and that would be a very good ending to the bull market, actually going into new all-time highs again. After weeks like this, we don't tend to just V-recover. It's going to be a few weeks, and we're going to have to find some sort of level. This may not be the bottom for sure. This is a complete capitulation, but we go again, and we are consistent. If you do trade, Bybit deposit bonus down below, and you can get a deposit and trading bonus on Apex and a 10% permanent fee discount by the link below as well. I'm James with Money GG. Cheers for watching, and I'll see you in the next one.